We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to look at a possible method that Max Kaiser worked out his 225,000 target for Bitcoin and US dollars for 2021. We're also going to look at the dominant channels for Bitcoin and US dollars. So the light green channel you can see has been a major channel for some time. It found support there. The target was there. Okay, it broke here. Found support here and broke there. Whoops. Yeah. Goes back. Okay, so the green lines are the dominant channel, and as we see, this was a COVID attack here, and we've had these 3 points. It's the high there and a high here of the highest close, and the low there has been formed this channel since March 2020. Okay, so as you can see there, price has been moving up this channel. We're now testing the lower end of the channel, and we've had 2 week inside bars of the main weekly bar down. I should say this is the Bitcoin chart and weekly up here. Okay, right, now I'm just going to clear that. I'm going to increase the focus so we can see what's going on. I'm just using the web browser expand. So what we can see here, hang on. That's better. Right, okay, so what we see here, we've got the there, and there. Those are the 3 points used to draw the channel. You can see nice support there, a test there, and it failed to break down, and we see support here. Okay. Now, so long as the weekly lows hold true to the channel line, so we don't get any more lows below this point here, the last two inside bars. I mean, it might go a little bit lower here, but the next 2 weeks, if the demand proves to be here, it could be very, very bullish to Bitcoin, and Max Kaiser's target of 225,000 by end of the year is definitely on the table. Now let me explain something. If I take a time period study, or the T-theory study of some major points in this structure, I take this point here, and when I take, see how that was a point off the lower channel line. If I take that there, right, we get, I'll just draw some vertical lines and a vertical line there. So that means in this period here we had a rally, this period here we had a consolidation, this period here we had a rally. I'll just draw another line what I'm talking about here. We'll just break it up into parts. Okay, right, that's more like it. So here's between, these are equal parts. Okay, equals. Quite good symmetry. So for the first part, well, we obviously had a shock, but then we had a rally. Let's define that as a rally. Then we had consolidation. Then we had rally. We've had consolidation, a bit of a shock. So we might see how we got some gap here. We might get 1 or 2 more weeks of consolidation going sideways to maybe hopefully inside bars and not any shocking volatility to take out new lows. Because if that holds to be true and the demand comes in out of the lows, a rally that would mirror this type of move from there to there, which would just make it perfect symmetry. So we've got the symmetry from there to here. We're taking off from here, boom, and we get to about I would say 170,000. Okay, so any blow off top will take it up to 225,000. Okay. So that rally, the same energy that we had from there, from 10,000 to 60,000, if it was reproduced here, the same energy, like an equal move, A, B, C type thing, that would take the price up to close to 180, 170,000, and if we get a blow off by end of the year. Could tickle 200,000. Okay. Now, if you notice, see how everything's quite timed to cycles. It shows a lot of symmetry. Okay. But my point is this: if the symmetry is to remain and demand is to hold true, the next 2 weeks we want to see demand hold above the lows of the last 3 weeks. Okay. We want to see, we want to see lows hold above these points here. Okay. So that's, I think, 34, 35, 36,000. We want to see those lows hold. And if that does, that means demand is in the house and it's slowly going to work its way up. And as you know, as things accelerate, we get a bit of excitement at the end, and it could tickle Max Kaiser's target. So let's see how the next 2 weeks goes. This channel is working, and I'd just like to note, if I said if I put a horizontal line with that target there, you notice how the red line and the green line once again marry up. If I just shrink that, put it back. The red line and the green line marry up. That would have to say it's very similar to that peak there, how the green line ended up being resistance and a major top. So if we get a rally up here and it goes to the top of the red line on this channel performance, it also returns to the green line here as resistance, and that could probably mirror a top up there. So that top could be anywhere between 160 and say 225,000, because we don't know where the last bar is going to form, and that would, you know, coincide with that top there. And how we just have to see how it travels. It might go long slow, then shoot up. It just might go up steady like that. So that's channel work with Bitcoin. But like I said before, we need demand to prove that it's underneath this and that the volatility smashes down are done with. And this would probably have to coincide with the US dollar not rallying, as we saw on Friday with the disappointing jobs report. It's not going anywhere fast. So you might see the US dollar going sideways for a bit. That means this will probably just trick up very gently here. Now, if the US dollar breaks low from 88, 87, 86, 85, then we might get some acceleration at the end, like that. Okay. So that is how the channels forecast possible price action. But it all starts off good. So long as it doesn't go, we don't want it to have a volatility crash down here, because obviously going back up here, the confidence would have to be pretty damn good for it to see that. That'd be one hell of a terminal shakeout. Anyway, thanks for watching. That's channels and using T-theory with Bitcoin and seeing how we can forecast to Max Kaiser's target of 225,000 by the end of the year. Thanks for watching.